DCB Bank Limited. This is a bank whose stock price hasn't moved in the last so many years. For example, in January 2020, it was 203.5 rupees, 0.05 rupees. Currently, it's at 158.4 rupees. So as you can see, all the way from the 2018s all the way to 2025, price hasn't moved. However, in the same time, the earnings have actually increased quite dramatically. For example, in December 2019, we had sales or revenue of 897 crore rupees. Now we go all the way to September 2025, sales have increased to 1,822 crores in a single quarter. So, and you can see this green line, this is the net profit margin. So you can see the net profit margin line has actually remained pretty consistent. For example, in December 2019, the NPM net profit margin was 10.77. Latest quarter, 10.09. So it has remained pretty consistent. Sales have actually increased. The price to earnings ratio has declined significantly from around 22.5 in July 19, currently around 7.4. So price has remained kind of the same. Earnings have grown. Is the bank undervalued or not? Today, we're going to analyze the company's financials, what it actually does, its presence, and its future guidance. Let's start. 5,078 crores is the market cap of the bank. Current price of one share 158 rupees. The book value, that is the assets minus liabilities, is 189 rupees per share. So book value is actually more than the current price. Return on capital employed is a pretty solid 7.67, price to earnings ratio of 7.59. Here we have the profit and loss of the company from 2014 all the way to 2025. The company has shown a compounded sales growth of 16% over the last 10 years, 13% over the last 5 years, 23% over the last 3 years. Compounded profit growth has been 12% over the last 10 years, 13% over the last 5 years, 29% over the last 3 years. So the last 3 years have been very fruitful for the company. And this dip, 5 years dip, lower growth, even then 13% was because of COVID. So let's go to sales, okay, and let's go to all the way to fiscal year 2025. We move here, we see we have sales of 6,471 crores is top line, and appropriately the bottom line, the net profit, it's here the bottom line number, 615 crores worth of net profit in fiscal year 2025. Now, double digit sales growth, as we saw here, double digit profit growth. Both of them are here. So let's see what the bank actually does. That's a bank, of course, with a pan India presence. Okay. Headcount was 10,792 people. Okay. Branches. Now let me just zoom in. 27% of branches are in metro regions. 25% are in semi-urban, 19% are in rural, and 29% are in urban regions. So pretty diversified. And in terms of the states, if we actually zoom in, you can see the diversification in terms of states, with one state being 19% and 16, 12%. So one fifth is the concentration, highest concentration, almost one fifth in one of the states. So which state is this? I think this is Delhi. The blue one is Delhi. The yellow one is obviously Maharashtra, 16%. 12% is, which one is 12%? That is Odisha. Yeah, I think so. That is Odisha, 12%. I think it is Odisha. So that is a concentration in terms of where a branch is located and in which states is the bank most located in. In terms of penetration, where is the bank penetrated a lot? So we see Odisha, we see Gujarat. Hold up, what is going on? Hold up. Yes. We see Odisha, we see Maharashtra, we see Gujarat, we see a few of these states with higher level of concentration. Then moving on, what is the size we are talking about for this bank? What is the size we are dealing with? So the total balance sheet of the bank is 78,898 crores. Okay. Advances, total number of loans are 52,975 crores. As you can see, the growth was also 19% year on year. It's impressive growth. Then deposits were 64,777 crores. So this is the size that we are actually dealing with. Okay. Current account savings account as a percentage of loans, sorry, percentage of deposits was 23.5. Higher this number, the better. So this is something they need to work on, down from 25.6% 12 months ago. Capital adequacy ratio is at a very comfortable 16.41%. And provision coverage ratio is also comfortable at 74.15%. Okay, moving on. We're going to move on into guidance. Guidance, okay. What exactly has management said about future growth targets they're looking for? So let me just zoom in, very quickly zoom in. Yes. First guidance is that they aim to double the balance sheet size every 3 to 4 years. Then they want to have the business model's net interest margins from 3.5 percentage to 3.65 percentage points. Currently, it is 3.23 percentage points. They need to focus on that. Then the targeted gross non-performing assets, they want it to be below 2.5 and net non-performing assets to be below or equal to 1%. Then the credit costs between 45 to 55 basis points of 0.45 to 0.55% of total assets. Then they want the cost to income ratio to be 60% or below, currently was 61.15%. They wanted target cost to average assets being 2.5 to 2.6%. It was 2.43%. That's currently under the guidance. Then, very importantly, the return on assets are currently 0.94% for quarter two fiscal year 2026. That's the latest quarter. They wanted to be above 1%, target 1% or above. Return on equity was 13.2% for quarter two fiscal year 2026. They wanted to be around 14%. Okay. And I guess the most importantly is this one, aiming to double the balance sheet size. Balance sheet size double, meaning the size of deposits and advances they want to double every 3 to 4 years. So again, the bank is always aiming for higher and higher growth. Then you're going to take a look at advances. Okay, update on advances. Exactly the move clear. This has become very messy, I must admit. Very messy. Hold up. Yes, update on advances. These are the advances figures, as you can see, grown massively from 44,000 crores in September 2024 all the way to 52,000 crores in September 2025. Then, the composition of these advances, what are the advances actually being given for? So you will see there's a massive percentage, okay, there's a massive percentage of this blue, 42.8% being mortgage loans. Mortgage loans. And you see the 16.1% green, that is co-lending, where they generate a loan with some other financial institution. So co-lending is this big growth thing for them. Lower margins, but co-lending can include mortgages, can include gold loan and all of that. Then 23.5% is this agriculture and inclusive banking segment. And of this 23.5%, 9.9 percentage points of this 23.5% is again mortgages. Okay, it's again mortgages. 9.9 plus 42.8, 50% plus we see from mortgages. So a lot of concentration mortgages, and then we have other things. We got commercial vehicles, we got even gold loans, whatever percentage they may be. You can take a look at the colors. If you want me to zoom in, yeah. You can take a look at the colors, pause, and then take a look at the concentrations. Okay, moving on, deposit profile. Okay, yeah, this is not clear. Yeah, a deposit profile. So here we have the deposits of the company. A Yikes. Yeah, deposits of the company. Here we have the current account, savings account, and then we have the term deposits. Again, massive growth. As of March 2021, it was 29,704 crores total like deposits. Okay, increased to 49,352 crores as of March 2024, and by September 2025, 64,777 crores. Current account savings account mix has actually gone down. No, no, no. It shows a mix of current account and savings account. Savings account being around 84.3% of total current account savings account. Current account section making only 15.7%. Then we move on finally to this metrics. The gross NPAs currently stand at around 2.9%. They want this to go to 2.5 and below. And currently, it's just showing a nice decline. Net NPAs, they want it to be around 1%. Stable 1.21, slightly higher than 1.17 12 months ago, but okay. Slippages, new number of loans which have actually gone bad. This slippage percentage shows. So lower is the better. 3.17, okay, at least eh, it's kind of a provision coverage ratio. All right, comfortable 74.15%. Moving on. We go to the yield on advances, the interest rates that they actually get on advances. All right, 11.17%, a slight decrease. Okay. Cost of funds has also seen a slight decrease. The cost of deposits, the interest that they pay on deposits, has also seen a slight increase. Unfortunately, the net interest margin has also seen a slight decrease, 3.93% all the way to 3.22. Let's see if they can maintain this between 3.5 and 3.65. Good thing, return on equity has actually increased 11.7%, 12.3% to 12.39%. That's a good thing. Return on assets, they want it to be around point, they want it to be around 1 point, but the first half of fiscal year 2026 was 8.87, but the second quarter was 0.93. And cost to income ratio, all right. Okay, they peaked around 2024. Let's see if they can keep on this decline. Finally, a consistent growth in fee income. So this is non-interest income, okay? The non-interest income that bank makes. Here, it is this massive blue line, this blue block. It shows commission, exchange, and brokerage income. This is like the core fee income, core non-interest income that a bank makes. Like this yellow one, you see, it's very fluctuating. It is profit and loss of sale of investments, very fluctuating, non-recurring. Commission, exchange, and brokerage is actually a consistent one. For example, DCB Bank, you go to DCB Bank, you are a customer. If they sell you third party insurance, they sell you some insurance of some other insurance company. The insurance company will pay them a fee that comes under this commission, brokerage, and exchange. If you take a loan, then there's a loan processing fee. They take that from you. They have shown a consistent growth. Like, for example, 139 crores 12 months ago to 158 crores a quarter. So this is something they want to keep growing by growing more third-party distribution products and taking more fees. So yeah, that is one more thing they're looking at. That was it. So DCB Bank is a fast-growing bank at the end of the day. It has shown an increase in the return on equity, at least. It is not the most profitable bank. Its net profit margins around 10%, while, for example, ICICI Bank will reach around 29% net profit margins. That is the problem. The operating profit margins are, I believe, pretty much the same. Its cost to income ratio is pretty high, like 60%. That is pretty high. Net interest margin among other banks is not the best. Neither is the return equity. Only thing good, very good about them is the growth that they've displayed, especially in the recent quarters when many other banks have not succeeded in getting that much amount of like double digit growth, while this bank has again sustaining that 14% plus 15% plus growth. It's trying to double its balance sheet, basically double the amount of loans it gives out, double the amount of deposits it takes every 3 to 4 years. It plans to double that. It plans to be more profitable